Welcome to today's informational webinar, which will be conducted on candlestick pattern, which has bearish candlesticks. Today, we shall be focusing on understanding the 5 most prominent and most important patterns and their bearish significance. So let's focus upon these 5 types of candlesticks. See, when you have a candlestick which has only concentration of sellers, it's not going to have any wick. Can you see there is no wick here? This is one of the most strongest form of candle which has clear intimation that it's full of sellers. So whenever this is standing anywhere or it's formed anywhere behind any green candle, ahead of any green candle, you should take a pause before buying next to it. Definitely price action has to be a part, but first let's clear the functions of basics. If your basics is clear, everything is clear. Okay. Now, the most important part is you need to know the intensity of the percentage of sellers in a candle. So this is considered to be the most bearish candlestick. This can form anywhere where sellers want to take control of the market. Okay. Whereas the second format, which is you can see there is body at the bottom and wick in the top. Okay. What it signifies? That buying could be there, but now the sellers have come into action. That's why this candlestick is being formed. Or it can also happen when the markets are choppy and suddenly they want to drag down the market. Or they denote further strengthening of a continuation pattern. We will see it on the charts. There is an important point. Why did I say that this candlestick, how can it denote further strengthening? Because what happens is, let's suppose that after this candlestick has been forming. So with 100% concentration when the sellers are coming in, some sellers might be thinking, now it's my time to get out of the markets, right? Let's say the trend is continuation and this big candle forms here, and after that this candle is coming up here. So there was some auction of buyers which went up, but ultimately the sellers have taken control and they clearly said, no, we are here to dominate. This is the reason why I said, when this candlestick forms somewhere where there is sluggishness, consolidation or continuation in the trend, pay special attention that there might be further pushing of the trend on the seller's side. This third number, I consider it as a normal bearish candle as it is written, because it has some wicks. I will not trade any candlestick pattern ahead of it without seeing the price action or without having a very strong momentum driven rally towards the downtrend. Why? Because I said you, this ticks denote auction process between buyers and sellers, or it's some compromise, or it's some confusion, you can say whatever. Okay, so that's why I have denoted it as normal candle. It doesn't hold that importance, but definitely it has sellers into it, so it's an important part of our candle, but it's less intense. Fourth one, as we go, it's a normal bearish, because you can see the sellers are still prevailing, but there is void up, there is void down, and you can clearly see that buyers or sellers are trying to negotiate something better, that come on, let's stop selling now, we are here to take the control of the market. Okay, the buyers are shifting from this selling side now. They are trying to take care of the sellers now, that get out of the markets. You are done here. We are not giving you anything anymore now. Okay. Last but not the least, you can see I have written it as a least bearish. Why? Why did I say so? And there is the importance of this candle. So let's discuss this on a major perspective. You can see this being the most bearish, this is the least bearish. Why? It has sellers at the top, at the middle part, at the bottom. This has been seeing sellers diminishing. The buyers are coming, that's why the wick has formed. And buyers are filling up, filling up, filling up, filling up. Finally, the buyers are tired to some extent that enough, we could buy only this much up here, we could take the markets, and the sellers are trying to dominate. So the importance of this candle is this candle has to form somewhere near the trend exhaustion. It can act as an alarm for you that the seller's trend is for an end or for pause. I'm again and again telling you, every candlestick has its own story. Candles talk to each other because it has emotions of the traders into it. Okay. So when you are trading purely bearish markets and this candlesticks form into it, it's going to help you. Let's see how we relate the further story of it. So now here, what happens is when this candlestick is there, bears are at their highest powers, that I'm at the top, I'm going to push everything down. What it means is bulls have almost no control because bears have stumped themselves into the market. Here, when this big candle forms, you can clearly come to see that the selling part has initiated. Likewise, if you remember the candle number 5 which I was telling you, if you remember this one, okay, you can see after such a massive selling, this candlestick gets formed. So what it denotes, the sellers who started from here are either covering their profits here because they had some target which got fulfilled. Let's say they started at 10 and now this candle is at 6 level. They are putting up their efforts, they are making the profits, they are out. They might be intraday traders, short sellers, or very small targeting featuring community of traders. What happens is the guys who have initiated this trend with large chunk of volume, they still hold this position strongly and they put in another bomb of sellers here. Can you see this? That less buyers at the top, then again a big seller lobby standing downwards. Then again comes fifth candlestick pattern which we were seeing, that the people who might be having some leftover positions in the market here are trying to come out of the market. So this retail buying rally was found out. But it still showed that sellers do exist in the market. You can clearly see. Okay? You can clearly see here. The same auction process is continued. The sellers again push down the market. What you should see in here is the close of the candle. It's continuously lower lows, lower lows, lower lows. This is very important thing. People don't connect this with candlestick. They just see the color, the wick, but the closing is very important. Continuously you can see the closing is lower than previous candle. Okay, so the bull are out of the markets. I clearly mean bull. Bulls do not get confused with buyers. Buyers are somebody who are waiting for the auction. They can buy the positions who come in, but bulls take care of the market by snatching the positions from the sellers. Okay. Finally, the confusion candle, the normal one, which I would say. Yeah, there are some buyers at the top, some buyers at the middle, sorry, at the bottom. So we call it normal one. So this is how we interpret candles. Now coming to the further part of it. Continuously selling has happened and this rally has been exhausted, and finally we come to stage 1 and 0, where you can see neither the bulls are in control of the market or the bears. Bulls as it is did not have any market in there, but now this candle which has formed here, which we will cover in other part, is giving a hint. The sellers have lost their moment for the time being in the market, and if this candlestick forms at an extreme low of the trend, it ignites a seller's end. It is trying to signify that the strength of sellers is going down and buyers are trying to take control. It will depend on where the next candlestick forms and what is its pattern, of course, but this is how you need to interpret it. Let's see this on a practical chart. Today, after the CPI event of US, let's see the candlesticks which we were trying to see. Okay. Do you all remember this candlestick? Full of buyers, full of buyers, little less buyers, and again lot of sellers. I'm sorry, it's full of sellers, all these candlesticks. Now, what has happened? A downtrend has been initiated. And what happens? You come to a information that yes, the current trend is in a downtrend. Okay. What happens next to this is the trend changes, as I said, because somewhere where these buyers were, the sellers who were trying to sell in the market were very much active. Now they are trying to either get out of the markets or the buyers have stepped in, whatever you can say, because it's not always mandatory that the sellers are booking profits. No, buyers can also try to take profits, because whenever there is selling, as I have written downward, selling always happens fast. So selling is happening very fast. But when buying happens, to come out of this selling zone, it has to go small. So you can consider the small candle which is here in between this red and between these two red. Profit booking has happened on this particular candle. Let me clean the chart and try to give you a clear hint. This one. But what happens? Sellers again try to drag the market down. It's a full red candle. That means control is hand of the sellers. Now suddenly buyers jump in. You can clearly see. If you know complete candlestick patterns, you can see it's a bullish engulfing. What it means is the complete red candle is swallowed or occupied by a green candle. And what does such a strong green candle occupy? Buyers. So when you see such trends which are coming down from a very long time, this ignites a trend change. And after that, exactly this has happened. Suddenly where lower lows were coming, now it's up flat. The lows are flat. Slowly the lowers are shifting higher. You see? You see? So these are small basic concepts you need to deploy in order to understand when the trend has been activated, when the trend is slowing down, and when the trend is changing. This is important. Coming to the news event factor, you can see here, see what news has created an impact. We have received some requests from people who want to know how to trade news events. It's an important and advanced concept, so which we will try to cover in coming videos with a live news trading session on a live account, not on a demo account or something. because you should be very serious while you are trading. The emotions come when you are seriously trading a live account, not a demo one. You know, that's the point in it. So as I have written, selling always happens fast. This is news event. So selling has happened very fast. But what has happened after that? Some calibration by buyers. Again, the sellers took control. That means the weakness is here to prevail. The sellers are pouring in the markets. So this is all about it, my friends. Please try to understand that basic candlestick patterns are only going to help you understand price action of future. So if you really understand these concepts very well, it's going to be very useful for you. That's all, friends, for now. Contact us on our email to know any special topic. Thank you.